Though the South African economy is growing, it's still below par, somewhere in the region of 3%, could be less. It's not sufficient growth to dent the unemployment gap that we're seeing in the country. What's your outlook for this economy in general?
I think to start off, Lerato, I think you're absolutely right. 3% growth rate, South Africa is not able to actually break through our unemployment challenges and other issues that we face from it as a developmental state. The Minister of Finance has argued that we need to get growth of at least 7%, and I'd agree with him. And if we get growth at that levels, we're able to start making an impact on unemployment, which sits at about 25%. We can actually bring it down to much lower levels, circa 15%, which then gets us to be competing with other emerging markets at a much more, key playing level. I'd also argue that the constraints to our growth are largely around infrastructure. We don't have infrastructure as widely developed as we should. There's also skills. Those things really do hold our ability to grow, going forward.
Let's chip away at it in small blocks. You mentioned the fact that South Africa has been fairly interesting to investors in the emerging market space, and to that extent we've seen equities generally being on the up and very large capital inflows, say, for what's happened recently. It's raising the question as to whether South Africans are organizing their portfolios adequately and correctly. What should we be doing?
I think if you look at the South African equity markets, they're actually fairly high relative to historic levels. And I think if you look at to the end of 2010, you'd have seen that from a PE basis, the overall market was about 17 and a little bit above 17%. That's high relative to historic levels. So I'd argue that investors should be cautious about SA equities going forward. I mean, we look at real returns in SA equities and say, you'll get 6%. So that is not too bad relative to what you'll get for cash, which is probably about 1.5% going forward. But again, our view would be SA equities are you need to be at least neutral or best neutral. They are driven by commodities. We're a commodities-heavy stock exchange. And so as long as commodity prices are running strongly, as they have in the past, you will see South African equities doing well.
I mean, the market obviously is dominated by institutional investors. That's where the money's at. But there are calls for us to see more retail investors. Is there that kind of consciousness? Yeah,
we do see retail investors. And I think it's the pooling system for savings vehicles in South Africa, which then get channeled through by institutions. Unit trust investors or small investors are putting away the little that they can over time, and these amounts that they bring forward get pulled together by institutions. They apply them into the market. But as I said before, the key issue there is to look at where returns are attractive. SA equities, I think, as I said, are best neutral. You'll probably be not doing a bad job by looking at international equities, which have come off a very low base.
I mean, I think the ongoing conversation in South Africa, and certainly it's being put to the fore by the Minister of Economic Development, is this need to boost the savings culture in the country. Too few people pay tax, and the burden is on them to really subsidize the economy in many ways. And there are calls within this new growth path for the state to intervene and make it mandatory to save on your earnings. What do you make of this particular debate and the proposed steps by the state?
I mean, firstly, I support that we should have some state intervention to kind of support underpin savings. The debate is not a new one, or the call is not a new one, because for the last 2 to 3 years, there's been quite rigorous debates between National Treasury, the financial services sector, to look at retirement fund reform. How do we create a national savings schemes that provide an underpin to all South Africans, but also provide a private scheme where those who want to save in a much more discretionary nature can do so. So I'd argue that is a must that we need to look at. Different markets have approached it differently. So if you look at Australia, for example, they brought their superannuation regime in the past, and they've been able to create a safety net for all Australians. Argentina has looked at something equivalent. And then you also have markets such as China, for whom savings is a natural, cultural issue for them. So they don't have the challenges that we have. But for South Africa, given our, kind of welfare bill, it would be prudent for us to think about, making it creating compulsion around savings.
And obviously, everybody's looking at Africa as the new growth frontier, and we're seeing a lot of banks and insurers entering the continent. What does the landscape look like by way of the retail investor?
I think what's most interesting about Africa is the growing consumer base, and our definition of consumers is people who have discretionary, excess income beyond the basic provisions of food and shelter. And I think what you're seeing in Africa is rapid urbanization. There are about 52 countries in Africa that have a population of over 1 million, and that's continuing to grow. And through the economic activity, and Africa is going to grow at about 6% GDP growth rate going forward. So, if you're seeing that level of economic growth, you're seeing much more urbanization, bigger consumer bases, and creates opportunities, for financial services companies to provide products, as well as for companies that provide, basic goods, your basic white goods for homes, for people who have not had those kind of products in the past. So Africa is actually a very important growth market going forward.
I mean, obviously we have this burgeoning African middle class, but it's subpar when you compare it to the figures of people we're talking about in Asia, for instance. Just about 160 million people earning above $5,000. And this raises the question of where the limitations are. You mentioned skills earlier on. Is this a fundamental problem?
I think skills and infrastructure are fundamental problems for Africa, and both have to be tackled together. I mean, tackling one is insufficient. I mean, the base infrastructure gives your economy leverage, in terms of just having the basics right, whether it's rail infrastructure, roads, telecoms, IT, those kind of things working. And on top of that, if you've got good skills that make you competitive. And I think we need to be thinking as Africans, what are the things that are going to make us competitive relative to Asia, and thinking in the area of where growth will come from. Technology is going to be a big driver of growth going forward. And so how much are we putting forward? We're investing in maths and science, and making those very key subjects for our economy, so that we can also get our economies growing very fast. So the challenges would be in that space of skills and then infrastructure.
Some would argue yes, skills is one issue, but we also have limitations by way of indigenous capital. Not enough Africans are investing locally. Yes, we see the burgeoning and the growth of a lot of SMEs, but it's hardly enough to create the sort of dynamism in African economies that's needed.
Again, a couple of things are needed. I mean, the first is having an enabling policy framework, country by country, that promotes that kind of, entrepreneurialism and the investment of indigenous capital. Creating the right tax breaks, creating, zones that support particular industries is key. The other argument also to put forward would be the one around, where are the things that we could be doing quite easily. So, for example, in a country like South Africa, you would argue that beneficiating of minerals must be very key for us in terms of driving our economy much, much faster. Diamonds get processed and refined in India, and others type of examples.
Financial services in 2011, we know that financial services bore the brunt of the credit crisis, and now they bear the brunt of the regulation that's required post-credit crisis. But for economies like Nigeria, the banks need to perform in order to get credit flowing again, in order to lend to the state, for instance, even if it's a major player in the economy. With these kinds of needs within African economies, where do you see yourselves playing?
I mean, we're looking at Africa and saying, again, from a financial services point of view, that it's very attractive, and we think of it often in nodes. And so there's a very strong East African node, and there's a very strong West African node. As to your point, regulation is coming into play, and we've got to figure out how do we play within that regulatory framework. Regulation is not new to us. We've been adapting to regulation. And so both at the banking sector and in the insurance sector, there are opportunities for us to build products that serve that burgeoning consumer base that we spoke about. So you do have some challenges around banks getting the capital, strengthened in places like Nigeria, and then attracting, capital and skill sets from other parts of the world. There are a lot of innovations that South African companies can take to places like Nigeria, but there's also stuff that we can learn in markets like Nigeria. It's going to be two-way. But Africa is very attractive from financial services point of view, and I think it's the one area where a lot of the international banks are looking at and saying, if we want to have a real emerging market footprint, there's no way we can miss Africa.